Welcome back. You're watching the Citizen Business Centre. Now, a fortnight ago, the Central Bank of Kenya suddenly closed Imperial Bank, making it the second bank to be shut down in a space of 2 months. And it is now emerging that the mid-sized bank was the victim of massive fraud perpetrated by its management. Although CBK has indicated that Imperial Bank is viable and could be reopened in a month's time, questions abound as to why fraud within the bank remained undetected for years. But first, let's take a peek into who owns Imperial Bank, which was founded in 1992 as a finance and securities company before it was converted into a fully fledged commercial bank. That's in January 1996. According to an information memorandum issued by the bank in September, Imperial Bank is wholly owned by Imperial Securities. The main shareholders in Imperial Securities are Abdumal Investments, East African Motor Industries, Janko Investments, Rex Motors, Imaran Limited, Kenbless Limited, and that's the makers of Kenbless Bread, Momentum Holdings, and Reynolds and Company Limited. The bank's board of directors is composed of 10 directors. Imperial Bank's chairman is Al-Nashir Popat, who has served as director since 24th December 1992. Naim Shah is the bank's interim managing director. He was appointed in September following the death of the bank's long-serving managing director, that's the late Abdul Malek Jan Mohammed. The late Jan Mohammed is currently at the center of investigations into how the bank lost 34 billion shillings. Anwar Haji, a non-executive director, has served since the 15th of November 1993. Jinit Mohan Lal Shah has served as a non-executive director, that since the 3rd of November 1997. Another director is Mukesh Kumar Patel, who's also a non-executive director. He's been on the bank's board since 3rd November 1997. Vishnu Dutia, also a non-executive director, has served since 15th February 1995. Let's look at the next. That's Hanif Somji, a non-executive director who has served since 31st July 2002. Eric Gitonga Bengi, a non-executive director, has served since 1st July 2014. Omurembe Iyadi, also a non-executive director, has served since 1st July 2014. And finally, Christopher Diaz, a non-executive director, was appointed on the 1st of February 2015. Now, Diaz is also the marketing director at Kenya Airways. Now, having taken a look at Imperial Bank, let's broaden that discussion to the state of Kenya's banking industry. And we're asking, are depositors found safe? Why are borrowers being subjected to higher interest rates on loans? These are just some of the questions that we want to discuss tonight on the Citizen Business Centre. And of course, we would love to hear from you. If you do have any questions for our panelists, we've got Habi Lolaka, the CEO of the Kenya Banking Association, and Kwame Owino, the CEO of the Institute of Economic Affairs. Do send your questions via SMS on 2422, as well as on Twitter. The hashtag is Citizen Business, and of course, Habil, Kenya Bankers Association. All right. Of course, what we're seeing with Imperial Bank is a case where, stealing has gone unnoticed for over 13 years, and now Kenyans are asking, not just at Imperial Bank, but how safe is our money?
I think the safety of the deposits is another way of asking what is, the soundness of the banking sector, because your money is as safe as the soundness of the particular bank. And I think I would like to make some comments about the banking sector in general. What happened at Imperial Bank is a unique incident at a specific bank, and clearly it's not something that is systemic. It's not something that is affecting the whole banking sector.
But with Dubai Bank, everybody's now on their toes wondering.
Yes, and it's coincidental that the event at Dubai Bank and the event at Imperial Bank happened within close, proximity, but they were very different events. The circumstances that caused the closure of Dubai Bank and the circumstances that caused the closure of Imperial Bank are very, very different and distinct. So it's just coincidental that they happened within close proximity, but they are completely independent. But what I want to say is the fact that what happened at Imperial Bank was unique to the bank and does not reflect something about the sector. I think the banking sector is pretty strong, solid, and liquid.
All right.
None other than the regulator of the banking sector has affirmed that.
Kwame, what are your thoughts?
Well, again, I think it's true that just because we have one bank that for some reason has faced difficulties, we shouldn't. But the fact that in 2 consecutive months, or rather two months apart, just brings questions back to the regulator, especially the Banking Supervision Department. It's very, very clear that either they ignore or they actually don't know how to properly regulate or to have oversight over an institution, or rather a number of institutions that are this complex, such as banks. Again, as Mr. Laka said, different things. In one bank, obviously, it was trouble from the beginning. In the second bank, there was a whistleblower, which is an important factor. I think telling you as well that the regulators do not have their fingers on the right pressure points, because they should have been able to see this. So on the whole, I think it suggests that yes, there are very many people running banks who want to be who intend to be honest, but in and among them are also a small minority that could cause substantial damage.
Let's bring in the regular Kenyan citizen who's a depositor. You know, what happens to them in the case of a bank collapse? And I'm talking about this in the backdrop that some of depositors at both banks who are both still wondering what happens to me. Maybe communication from the banks has not been sufficient or efficient or on time. So whose responsibility is it? When do they get their money? How do they get their money?
I think for the case, if we take an example like the Imperial Bank, and that's one that has really caused anxiety among the depositors, because it happened abruptly, and you will have all your savings or your money in there. And I think in this particular case, the regulator has come out with a clear indication of which direction the discussions are proceeding. I think they're in the advanced stages of discussing with the shareholders to inject in capital to be able to open the bank for normal operations within a very short time. And meanwhile, the regulator is also very alert to the concerns of the depositors, and so he has indicated the fact that the discussions are going towards the direction of ensuring that the small depositors are paid as quickly as possible, and then you put into place a program to pay the other depositors who are above the threshold that will be agreed between the shareholders and the regulator.
All right. In terms of corporate governance, Kwame, I want to bring you in here. It raises critical questions about the position of founders or owners of banks, on the boards. And I was recently reading an article by George Bota where he said perhaps, founders or owners should not be on the boards, specifically of financial institutions. And it was a very straightforward statement about it. And we know, as of today, there's banks, local banks, that still have their founders having very key positions in the board. What are your thoughts on that?
Well, my thoughts, I think it's a little unfair to tell people who've taken risks that they cannot sit on the boards of their institutions and have other strangers, because part of that is usually, as I say, someone's vision and you have views. I actually think that responsibility should go back to the central bank, and the people we should be asking is what has the Banking Supervision Department been doing for 17 years if these things have been going on for as long as it is? What do those banking assurances then mean if we can find out such a deep hole in an institution, and generally it wasn't a conspiracy, it was one person or a number of people, as has been stated, who were responsible for it. But to then say to give a blanket statement by saying then that a person who establishes a bank, or rather a financial institution, should not sit on the board, I think, in my view, would be using a sledgehammer to crack a nut, which is overkill. The thing we're trying to solve is basically to prevent mischief. And banks being complex institutions which have so many transactions and everything else, my belief is that yes, transparency is one thing, but I think Even by Kenyan law, the banking industry and actually being a director in the banking industry requires a fit and proper test, which is more stringent than other companies. So if this thing is happening, notwithstanding that, then what it means is we just actually don't have proper surveillance mechanisms to know whether somebody who's sitting on a board or somebody who's running an institution is properly discharging those duties. So yes, some reform is required, but I don't think it should become as radical as saying that you establish a bank, because then nobody would establish that. I mean, people want some say over putting lots of capital in play.
All right, let's talk about interest rates. Of course, banks have begun notifying their customers that the interest rates have gone up. Treasury PS recently said that banks have raised their rates rapidly, too fast and too high. Habil, these are your people.
Yeah, I think maybe we need to step back and look at how banks determine the lending rates. One critical input into the factors that determine the lending rate is actually the cost of deposits, cost of funding that the bank uses to lend to the customer. When the cost of funding moves whichever direction, that reflects also in the lending rate. Now you will recall that in the market over the last few weeks or so, there has been a movement in the cost of deposits in the market. The central bank rate went up in quick succession as a policy response by 3%. The treasury bill again over a very short period has moved from 8.5 not very long time ago to currently the range of 23 almost for the 91-day T-bill, and that just reflects the kind of upward shift in the cost of deposit in the market. Now that obviously means that banks, because you're picking more expensive money to lend, they also have to transfer that onto the consumer. But having said that, I think you will notice that even though the cost of funding in the market has gone up quite steeply, the banks have not transferred the whole increase to the lending side. So to an extent, they have taken a long-term view, in the sense that this is a temporary movement in the market, and you do not transfer the full burden to the consumer.
Do you agree with that, Kwame?
No, I don't. My view is that yes, perhaps it's true. I mean, it's debatable, but there's evidence that the cost of funding, bank operations, or rather raising deposits, has gone up. And part of it is also because our savings in the last year, I think from 2012, 2013 actually, our savings, net savings nationally, became negative. So what that means is there's not as much savings. So mobilization definitely for banking institutions is higher. But I think that the main point though is that I think it's a big statement, and that's why I disagree that Treasury or the central bank should actually blame banks for this. I think the sledgehammer approach that they use to support the shilling and the very aggressive support that they use for the shilling means that one of the only instruments they had was interest rates, and obviously it ripples back. And so banks read this, and when they read other things in the economy, I think the interest rates that have gone back, and banks are actually telling us that they don't have much confidence in the medium term. So while Mr. Laka said that it's a short-term measure, I don't see it. I mean, for 23% is really, really huge.
Exactly.
Yeah.
When do you see the rates coming down, though? We've seen the interbank lending rates have already, come down to, I think, about 13 point something from 28 just a few months ago. Why are banks still being greedy about it?
I think what will happen is that, and as I mentioned before, banks respond to the market. If they're picking expensive deposits, they will reflect it in the lending rate. Now, when the rates in the market start coming down, banks will also respond accordingly and start bringing the rates down. And I think, to be fair, if you look at what's happening in the market, we can see a trend already developing. First, the jacking up of the rates was a policy response from the central bank. They took a number of measures.
Only that they jack it up a little?
One was mopping up liquidity from the market, and then 2, increasing the central bank rate, and then 3 was to try to manage the volatility in the forex market. Now, I think the response we can see in the market is that the market is beginning to respond. One, the volatility in the exchange rate has been well controlled. We can see the trending. It's trending from, I think, the upwards of 105. Now it's in the range of 101, and it's trending downwards. So the trend is clear. Inflation has been kept within the targets. Now, and with that, we hope eventually we start seeing the market responding. And given what happened in the auctions today, where we are seeing the T-bill beginning to come down, I think the trend is becoming, clearly pointing to the fact that it's going down.
All right. We've got some interesting views from Dr. James Mwangi of Equity Bank, who of course said this during the release of their Q3 results on Monday.
What we would appeal to you may be to postpone huge projects temporarily. It may be 6 months, it might be more prudent, because if we try to lend you at a lower rate than 22, what we are saying is that you can do arbitrage. You can just take that money and make us a fool of ourselves, and you, instead of us buying treasury bills, it's you who is buying the treasury bills. We lend you at 15, you pay us at 15, and you go and buy treasury bills, and you are paid at 22, and you are not taking any risk. So, and you can even assign us the treasury bills and say, this is my sec. That is where the problem is.
Mwangi, they're literally putting the consumer in a dilemma. What are your thoughts? Is it the wrong time to borrow?
I think what he's trying to give is some sound advice to the consumer. I think at the moment when rates are where they are, it's advisable to limit your borrowing to the bare minimum, so that you borrow what you must borrow. And there's some consumption which is, not necessarily to be incurred today, and that's the kind of borrowing that you can postpone. If you wanted to replace your TV, for example, in the house, and you wanted to borrow to replace the TV, I think at the moment that's a decision you can postpone to possibly the next quarter, see how the rates are moving, and then you make the decision in the next quarter rather than currently. And I think that's a message that I get Mwangi trying to transfer to the consumers.
Kwame, what are your thoughts on the KBRR, the Kenya Bank's referencing rate, which was introduced just a couple of months ago? Yeah. Clearly the bank's completely ignoring what we had thought as consumers that would be the last step for us getting affordable credit.
Well, I don't think that affordable credit is entirely in the hands of banks, as Mr. Laka said. But my view is, when the central bank came up with the KBBR, the rate, one of the things they should have asked themselves is, how does this rate transmit the proper signal to banks to give that? Because you see, there are many more things in and the interest rates, like everything else, is actually a reflection of something that's happening. So we can't force interest rates down if other, quote-unquote, what people call fundamentals are different. For instance, if inflation begins to go up, my view is part of the interest rates going up is an expectation that inflation may go up. Because you can't struggle with inflation, keep the shilling where it is, and keep and interest rates where they are as well. Basically, something has to give. So it's clear that the KBRR definitely has not been working as was expected, and perhaps as consumers we were wrong to actually expect so much that this instrument would solve everything.
All right. As we wind up, all the struggles, interest rates, the shilling, getting quite devalued, closure of banks, is the central bank losing control?
I don't think they're losing control. I think one of the points that Kwame mentioned is about the supervision department within the central bank. And when the current governor was appointed, one of the points that he came out quite clearly on is identifying the fact that supervision as a function within the central bank is critical, and he was going to revamp the unit, ensure that is adequately in terms of capacity in the unit is enhanced. So he had really identified that as a major area that he needs to focus on as he takes on the role as central bank governor. Okay, supervision being the weakest link yet, the other supervisor, Kwame, as you wind up?
Yes, I think supervision is definitely the weakest link. I don't think the banking industry is in trouble, but it's clear to us that those in the supervision department need to pull up their socks. I think they need to rework their toolbox in terms of detecting in good time what is the problem. But I'm glad that it's happened too quickly with the Imperial Bank, so obviously, depositors have some confidence that in a short while they'll be able to open, and for those with deposits $500,000 and below, they'll be able to get all their money. So that's definitely good work.
All right, gentlemen, thank you so much for joining us on the Citizen Business Center. Habibu Lulaka, CEO of Kenya Bankers Association, and Kwame Owino, the CEO of the Institute of Economic Affairs. We'll be right back with more right after this break. Don't go too far.